Dobar dan i dobrodošli na naš panel sledeće poglavlje u finansijskoj industriji. Rast, poverenje i inovacije. Kao što svi znamo, rast bez poverenja je špekulacija. Poverenje bez inovacije je stagnacija. I to je današnja tema našeg panela. Ovdje imamo predstavnike raznoraznih sektora finansijske industrije i jednog predstavnika IT industrije, da malo prošaramo, da ne bude samo da smo iz financija. Sa nama su Vladimir Bošković, član izvršnog odbora NLB Komercijalne banke, Kristof Rat, član izvršnog odbora Winner Insurance grupe, Stanislava Petković, CEO Vista Rika fonda i Aleksandar Milošević, Chief Technology Officer ASEA, da kažemo ASEKA. Pošto imamo Kristofa na panelu, mi uvek svake godine kad imamo nekog stranca preferiram da govorimo na engleskom zarad lakše interakcije, tako da će panel biti na engleskom. So, to switch to English and the first questions to kick off. And this question is basically for everybody, so please jump in whoever wants. In your opinion, what is the most important factors to achieve sustainable growth while preserving trust and enabling innovation? Who wants to answer first?
Okay, let's start from the banking perspective, so we are the bravest one, I think. Joking, so, well, for sure, coming from the banking angle, it's just good to mention that what's going on in banking. And at first, I think that banking is actually ongoing through really intensive transformation in decades, so to say. A lot of things are speeding up, especially from the point of technology, from the side of the competitors that are becoming more and more attractive, of course, but aggressive for sure. And a bit of that, by that also irritating a little bit. But from the very important side, on the customer side, we see a lot of, on the one hand, they are much more informed about everything that is going on in banking, in finance industry, and everything what is related to the growth. And on the other hand, they are very much, and much more actually, demanding than ever. So in such an environment, I think the most important thing is to say that sustainable growth doesn't come by itself. It doesn't come by chance. So I divide it in my opinion, by a couple of pillars. Like I put it 5. Anyone can add, in your opinion, what could be actually. But first of all, I started with trust. This is actually for us important currency, so to say, because this is a core product and that hasn't been changed. What's changed? The environment has been changing. So we are actually adopting it in a way that we are not necessarily financing, actually investing in short-term profits, but investing in a value and in this currency like called trust, and that actually is bringing long-term capital from both sides, from reputation and financial. So without trust, that you're actually building not when you're living in El Dorado, because when everything is fine, everyone is super, but you are actually building it in times of crisis, where actually clients, our customers are needed as the most. So having said that, I would say that without trust, we can't expect, that as a banker, deposits, investments, and finally growth. Second of all, we tackled this topic yesterday, thus I put it within these pillars is digital excellence, achieving digital excellence and productivity. And I will not bother that much about digitalization. We are living it actually from day to day, but productivity that is coming from meaningful usage of technology. This is a very important thing, and by that, the digitalization is becoming really crucial factor for future growth, sustainable growth, after all. Third, I would say operational resilience. By resilience, I mean from the banking perspective, strong capital position, building strong capital position, stable liquidity, as well as responsible risk management that actually allows us to react in a way in times of crisis, any crisis, cyber attacks, whatever it is, because then again, clients need us and our business continuity comes at stake. So this is something that for sure is becoming competitive advantage, resilience as such. Fourth, you mentioned innovations. So I think this is extremely crucial because traditional banks have to catch this speed train of everything that is going around us with this industrial revolution and everything. So otherwise we'll become obsolete and we'll lose long-term wise. We'll lose this game. And Coming to that, I strongly believe that if you're not investing in innovation, you're stagnating. Stagnation equals regression. So there's no growth again. And finally, again, something related to our yesterday's talk, and thus I put it, but this is actually really important. What we're actually doing right now also in LB is really acquiring talents. More and more, not just banks, every Indian company should really take care of attracting the talents, because these are new generations. We are talking that much about Gen Zs, Alphas, but especially Gen Zs that are flooding all over the place this world, and is becoming more and more dominant towards millennials at this very moment. Millennials, yes, exactly, at this very moment. So these are the people who are bringing the changes, boosting digitalization that has been already mentioned, fueling innovation, and finally is bringing a completely different customer experience. So what we should do is really investing in attracting those beautiful minds that are actually has embedded in their own DNAs everything that is related to digitalization and innovation, etc. So this will be my opinion. As said, in NLB, we're doing a lot about this, creating an environment and programs to be recognized, and also that these people could really decide finally to stay with us. And there is a lot of beautiful examples how they're actually acting. These are beautiful brains. So in my opinion, that would be.
You can't do anything without people.
Absolutely.
Christoph, please.
Insurance business is different because we don't sell a product which you can touch. We don't sell a cash loan. We sell a promise. Yeah? We promise the customer to help him when he does need our help. So it's all about trust. We are 200 years old. Yeah? Vienna Insurance Group is a company with a history of 200 years. And we are that old because we always fulfilled the trust towards our clients. I would say trust, 80% is the key success factor, 80%. And then you have 20%. Innovation, you also need to meet clients' expectations. You need to be quicker. You need to use AI to settle claims very quick, and also to offer features, which make the client's life easier. Tracking claim settlement process, for example, automated claims inspection. But once again, without trust, insurance companies cannot survive. And therefore, when we teach people, we train them very intensively in sales. Don't promise the client something that you cannot keep. People need to trust you. And we talk here about 20 years contracts. If you close a life insurance contract today, you get indemnity paid 20 years. So this is a long, long history. So we are also very conservative. Insurance industry didn't change so over the last 50 years. Now we see in the last years more trend, online services, etc. But when it comes to sales, not many people buy an insurance contract online. There are startups who all failed. When it comes to insurance, you want to talk to somebody which seems to be a reasonable person and a trustful person. So trust is something when we start in insurance business, we get at the very beginning into our DNA, and which is crucial. Thank you.
Yes. Well, of course, for us as the asset managers, trust is crucial because we are managing the client's funds, and basically, most important thing to basically ensure the sustainable growth comes from performance. We need to have the disciplined performance, and we need to have a strong governance. And those are two pillars that are basically most important for us to preserve and enhance and have higher assets under management and more clients investing with us, basically. We have to do that without compromising trust. We have to do that without basically with making sure that their capital is invested very cautiously, and it is very easy to grow when the markets are growing. We need to be disciplined in all market cycles. We need to basically build trust with our investors even when the times are unpredictable. And we are doing that with making sure that we are having open communication with our client, transparency and reporting, which is basically very adjusted to the situation, and that is very very important for us to maintain. After that, the long-term stability will come by itself. So those are the facts.
It's nice to see that that great minds think alike, and we share a lot of similar perspectives when it comes to pillars that Vladimir mentioned, and also Stanislav and Christoph, emphasis on trust. My view is a bit more going across these lanes of different regulated entities like banks, insurers, and funds. I was thinking more of like systematic way to organize these factors in some kind of layers, like a three-layered cake, where you would have a foundation of a cake where definitely trust is there, where you would have things like consumer protection. You need to have strong consumer protection. You need to have also strong enforcement and of regulation. And you need to have transparency in the market in that part. And once you have this layer, then we can build some layers above, like infrastructure. In infrastructure, I see things like identity, so easy digital identity that can be used across different businesses and by different places. Also, payments. I see payments as, yes, it's provided maybe by banks, not only banks, but it's also part of infrastructure. So some kind of real-time payments is there, but also sharing data. Consent-based sharing of data is one piece of the infrastructure that we need to have. And once we have both trust and infrastructure as a middle, some kind of layer of this cake, on top of this cake, I would see innovation. And there, for innovation to happen, once we have all these prerequisites, we need to have things like more competition, so fostering competition, but then also open standards, so have a level playing field for everyone. And then, yes, talent, as Vlada said, very important piece if you want innovation to happen. So with this, I can easily imagine when we have all these layers, scenarios like, let's say that some kind of SME has accounting platform, but in this accounting platform, maybe some notification happens that pre-approved loan was approved by a bank based on data sharing, consent of data sharing between a bank and this kind of accounting platform and this SME. And so the bank provides a loan quickly, does all the usual things in the background, and this is how I see things happening. Like when we have all these ingredients like open standards, APIs, consent-based sharing of data and everything, these things can happen easily.
Thank you very much. So basically, I mean, yes, in the finance industry, trust is a dominant factor. But one of the things I would like to work on in this soft script now, during this conversation, is whether trust hinders growth. And this is one, let's say, a very important topic. So coming to my second question to Vlada and Christoph. Southeast Europe remains one of the most bank-centric regions in Europe. Is this a structural weakness or actually a stabilizing factor? How do you see this, guys?
I don't see it as a weakness. Yeah. It's always a question of quality of the banks. Yeah. As long as the banks have a strong balance sheet, yeah, I see this rather not so much centralized, centric. So I don't see here any topic.
I'm good? Okay. also keep it brief, but for sure, yes, it is. This region is bank-centric, but having said that, bank centricity is is providing stability. So because the banks has a really strong infrastructure. We are managing strong capital position, already said, stable liquidity and responsive risk management. And why is this important? Because this allows us to continuously finance real economy. And this is extremely important actually for our country, because right now we have no diversification whatsoever when it comes to other markets like capital markets. So on the other hand, mentioning already that, I think that we need this diversification, because relying on one dominant source of funding, like just banks or any other, can be viewed as so to say, structural weakness. I think you use that word. So let's be clear here. I'm not saying that our ultimate goal here should be less banking, for sure. I will not say it as a banker, for sure, but I think that we need diversification on different ways of and providing different options towards clients, while same time keeping banking as a backbone of a structural, stable, and I would say faster growth of the economy.
Christoph, has to add something.
I mean, the topic is in Serbia, and it's also in the neighbor country, everywhere the same. Yeah? There is not a developed financial market. For me, as insurance company, we invest our assets very conservatively. Yeah? In Serbia, for example, we have more than 92%, 90% of our assets in government bonds, and remaining part is real estate. Yeah? We also could invest into corporate bonds, yeah? But we only invest in corporate bonds which have some certain quality, which have some certain duration, and where I can be sure that I get the cash flows, constant cash flows. And it's a pity, because at the end of the day, we could invest even more in Serbia. Also, our clients could invest more. They buy now unit-linked investment products, where often underlying assets are funds investing in the USA, in Europe, etc. And if there would be something appropriate locally on the market, the cash would stay in the country. So you have now a cash outflow, and also you have the problem that you don't have cash inflow from abroad. And from my point of view, developing in a financial market is a must, and it's high priority.
No, I mean, I agree. It's a must. I mean, in order to, if you want to develop the economy and further strengthen the economy and have growth, you have to, let's say, diversify the financial market. And coming to this, to Stanislav, my question for you is should alternative investment funds be permitted to, or even encouraged to allocate capital to early stage, let's say, technology startups, or any kind of startups? They could be biotech or whatever they are. Even if this introduces liquidity mismatch and net asset volatility, value volatility.
That is the issue, the mismatch in liquidity and the characteristics and the nature of open-ended alternative investment funds. Because by the regulation, open-ended funds should be, let's say, highly liquid, because all our clients can redeem their units, investment units, whenever they want. So for us, it is at this moment, according to this current regulation, open-ended funds cannot invest in startups, in any kind of, let's say, private equity or any kind of project which is not very liquid, which is long-term by its nature. But, for example, we can invest in real estate, which is also long-term in nature. So there's a kind of mismatch. And I would basically prefer if we had a kind of option to invest part of our funds, basically limited funds, into that kind of startups, for example. But that would require us and the regulator, of course, to have a very adapted framework, very adapted liquid model of the strategy we are offering. So basically, that should be all combined in order to. But it definitely does give us more investment opportunities right now.
Okay, you have to have adjustments, let's say, in the regulation in order to be able to do this. But just before skipping to the next question, I have a follow-up question, which is mostly for Christoph here. Last year, I mean, I'm always surprised when I read how, for example, a small country like Estonia, and I brought this country last year also on the panel, and I made a comparison how Estonia is number one in PISA test in Europe in schools, let's say, in math, physics, and it's first in math and physics and second in English. And Estonia, believe it or not, with 1 million population, has 10 unicorns. For example, Skype was invented in Estonia. Unicorn, just for everybody to know, is a startup which is valued afterwards after 1 billion. Since you operate in the Baltics, what do you see as, let's say, what are we missing? Because we're very, very good here in going times 2, times 3. My fund, for example, has 1.5 billion euros of assets. We do, I mean, we have proof cases of times 2, times 3. But we don't go to times 100, times 200, times 500. Can you, let's say, if you can give us a bit of an input?
Yeah. Has anybody in the audience already been to Estonia? Raise your hands. One, two, three people. Yeah.
3 people.
Thanks. More should go. May I make now some PR for Estonia? It's for me amazing to see in our group how great ideas our colleagues in Estonia and in the other Baltic countries have. And they don't just have ideas, yeah, they also finish the ideas and bring it in really quick time to life, yeah, and also with let's say, rather low cost budget, yeah. So I had a discussion with my colleagues and say, why are you so advanced and why are you so crazy about IT? And they told me, very easy. In the 19th, they had a program. The name of the program was called Tiger Leap. Yeah? These were 3 main issues. First, they developed internet infrastructure. Secondly, they increased education, education in school, yeah, in all different levels, starting from kindergarten to going up until 18 years. And all schools were also connected to the internet. Plus, government was very e-friendly. And then happened, you mentioned it before, Skype. Yeah? Skype was booming, yeah? Skype was suddenly skyrocketing. And this was motivating a lot of people. Yeah? They saw we are a small country, yeah, with rather limited resources, we can create great value. Yeah? So the people are also very motivated because they saw success and they still have success. Yeah? And, well, everybody meet people from Estonia, yeah, visit it, yeah, it's great. Yeah? Also in daily life, you see everything is automated, everything is electronically, yeah? Tax declaration, everything online done. Yeah? Government, you don't have any government administration, any paperwork. Yeah? So they started early. Yeah? And I think for us, for our countries, it's time to catch up, and this will not happen from one day to the other day. Yeah? And sure, first step needs to be on the government side. Yeah? You need to make it possible. You need to create the legal framework for it.
But besides the legal framework, is there, let's say, some financial incentives, some financial support for these types of companies, which are, because, I mean, one of the themes which Aca Vlahovic yesterday said is we have to move, let's say, to a new way of growth, yeah, an acceleration of growth, because the old model is, let's say, coming to an end. So what would this be? Did you see any, let's say, some financial incentives in the way that these companies are supported? Because, I mean, it's here. In my opinion, the funds should finance them, the bank should take them over at some point, and you should invest in them, you know, and Alexander should, you know, think of something to invest in.
Just a question that it actually relates to your first question to Stanislav and what she said, but in general, we really also have to take care of investors and their mindset, how actually they are willing also to know that the investment funds, any funds, are investing in those categories of clients, because maybe this is different risk premiums that they don't want to actually also to jeopardize final yields after all. So this is again everything what has happened, what Christoph mentioned to Estonia. This is one part is government, but second part actually is also how the public, actually how the investors, potential investors will actually observe this moves.
Alexander wants to add
Yeah,
to
I
this.
also want to jump in.
Please do.
I'm investing in funds, and I would be surprised if my alternative open fund would somehow sacrifice liquidity because now they are investing a part of the portfolio in startups, right? So I think that the expectation must be clear. What's closed, what's open, right? But I would also be quite fine if I invest in closed fund, that I have to stick with this kind of reduced liquidity and keep my money there, because this is how the fund invests in some kind of startups that will not be so liquid, right? So I think expectations need to be clear.
Yes, but just there is this issue actually. Investment in closed-ended funds is basically, according to regulation, reserved for professional investors. So no retail investors are allowed to invest in closed-ended funds. There is a global trend which is opening basically closed-end investment funds towards retail capital, because we also see more of the capital coming from retail, from wealth management, of course from institutionals on the first place. But as you mentioned, their investments are more long-term investments. Retail investors are not very willing to invest in something that is very unpredictable long-term, or with some, let's say, unpredictable cash flows, or small chance of actually a high chance of defaulting. Yes, yes. So as I said, I think the most important thing is to, in a way, modernize regulatory frame, basically to find what is the best solution for our market. As I said, this is a global trend. I don't also think that we on our market can have enough projects to basically make a mixture which will be adequate for of course retail investors and be long term and at the same time liquid. It is very difficult, and that is basically why most of the open-ended and alternative funds are trading traditional investments. So yeah, it's an issue for the.
It is. I mean, investors are throughout the region, and please jump in, are not very keen on taking overwhelming risk. An average investor, and this is, let's say, this is my opinion at least, So I don't know, and so it's difficult to develop this. Let's say if you don't, let's say, give us some kind of let's say incentive. And this is my question for example, on the alternative investment funds, whether this would be, let's say, a good starting point to in some form start it.
Yes, I agree. Sorry. Basically, that is the point of alternative investment funds when you think about that. But definitely, we do have to have more practical experience in that area. We need to have more track record in order to make this kind of investing more popular with our investors. So we basically see the retail investors that are more risk averse, that are willing to also take higher risks when investing their funds. But we still don't see the size which will be basically game changer for this kind of products.
Pokušam samo da uključim ovo. Okay, so I think that AIFs are actually a good point for maybe this breakthrough on the market, because there is a lot of premiums like tax loan, for instance, that is already embedded in premium that you're getting from AIFs. So maybe then this risk-averse clients will maybe be more comfortable with to go into this in order to try to spread the news and spread the mindset that should be created maybe towards this, what we are talking about. So the question is from the very beginning good. It's provocative, but for sure I think that everything is about mindset and how actually we are looking at this, regardless the fact about overall liquidity or not. This is just about how we are perceived on what we are investing and how actually they are managing our money finally.
So now that I think of it, what Stanislav said and also Lada, the fact that we have this kind of tax benefits related to funds, this makes it half open. in a sense that yes, if you want to stick and get all the maximum tax benefits in 3 years, so you are sacrificing some liquidity, right? And this may be the opportunity for these funds to be invested in something that can be, proven over 3 years.
Alexander, when you, sorry, Christoph, just please.
Well, we also invest in startups, yeah, but we don't invest clients' money in startups. Yeah, we invest our own capital in startups when we see they can bring value to our business case. Yeah, and I think more and more companies, international groups, will be simply forced, yeah, to make this kind of investments, because otherwise they cannot retain in the future. Yeah, I'm a little bit critical, yeah, when it comes to a retail client. Yeah, I wouldn't recommend any retail client to invest in startups. Yeah, and if you then say, okay, we give him a tax incentive, could be a solution. Yeah, but when a retail client is making an investment decision, yeah, we also need to take care, because today is investing into a fund investing in startups. If these investments are failing, he never will invest in any kind of fund. Yeah? So I think there we also should be a little bit cautious. Yeah? But I also see governments need simply to put more funds, make more funds available to invest in new technologies. Yeah? Europe needs to take some money in their hand and to go further, yeah, for sure. This already too late maybe, yeah, but never too late if you catch up. Yeah?
Alexander, one question for you, based just on this topic, and we'll return to the script. Do you see a deal flow? Do you see startups, interesting startups in the region? Because, okay, you're in technology company, you probably have communication with them. Do you see something that could be, let's say, okay, maybe not as Kuiper, but something that can have, let's say, dominance in a technology-wise? And and again, maybe this can be an addition to my following question for you is how, let's say, this AI or digital infrastructure will change the competitive balance between banks, insurance, and funds?
Yeah, so it's two-part question. For first part, I did not see really any. If I did, I would invest. Well, the question is whether would I tell anybody else, but I did not see. And I think that this AI will definitely make it more possible to have unicorns in Serbia, like we had in Estonia and so on. So it is going to be more level playing field. There are some areas that I think that are of highest leverage where the AI factor multiplies, but maybe some other time. I would not reveal them publicly, because maybe some targets of investment. So regarding how AI changes the competitive landscape between banks, insurers, and funds, I would see this as one thing is they each compete in their own lane because of their regulatory roles and their regulated industries, right? And this competition will still happen, and the AI will help them compete. And those that are adopting early and then they have structured way of applying this technology, they will outcompete in their own lane. But apart from this, they are also going to compete for the disposable income, right, for the wallet share, because it will be much more easy for customers to easily switch and select between different options. If I have disposable income, I may invest some, I may save something, I may put something into insurance, spend something, and so on, save something. So these options will become much more easy, maybe a click away or tap away for customers. So therefore, this competition for the wallet share or the part of disposable income between these three different lanes will happen. But at the same time, I see that the fact is that it's also funny that the same AI will make the cooperation easier, integration between these three lanes, in a sense that innovation componentizes finance. And because of this, some kind of integrations, like cross-sales between banks, funds, and insurance becomes more like a plug-and-play, easier stuff than some kind of year-long project. And because of this, we'll see more, probably more of the stuff where we have kind of the same storefront, different backends that all these companies have, and maybe some kind of mental model that I have in my mind is that instead of looking at these three different verticals as 3 different shops where you would go. I would think more of them like now being in the same shopping mall, so much easier to move around, and maybe they will share the same escalators and you know, power and some other stuff, but this is how I see it.
Okay, coming back to you know, the real world problems besides the startups, because obviously it's a question mark whether we have a deal flow on the tech startups. Christoph, insurance companies manage long-term duration liabilities. Should they play a significantly larger role in direct corporate financing and other long-term financing such as infrastructure, green transition, etc.?
Yes. Yes, they should and they could. It's always a question of quality of the bond. Yeah? We are here very careful. Yeah? We only take high quality bond, yeah? Or high quality infrastructure projects who have stable cash flows. And there is definitely room for investment in the insurance industry. Yeah? The insurance industry in Europe is the largest institutional investors with 10.5 trillion euros. Yeah? So, and there some part can be for sure be dedicated also to corporate bonds and to infrastructure projects. This is done in Germany, in Austria, we do this. Yeah. Here in the region, so far, we haven't seen any interesting possibilities in this area. But we would be very open also to invest infrastructure, Serbia and all the neighbor countries, yes.
We're in fight. Yep. Yeah, this is very interesting because I would like really to see insurance companies as institutional investors, for sure. And I think this is always about laws and bylaws. At first, I think because of the limits, I suppose. But also thinking that, you know, there is, with this system of connected vessels in terms of finance industry, I think we should use ourselves in between, you know, how we are approaching and analyzing the risks. So because, you know, from the banking point of view, when we are actually doing something, we are entering a lot of different risks. And when we actually served it, or served it on different ways, like on corporate bonds or to any other investors, through, for instance, capital markets, everyone is actually saying, like what Christoph said, let's go into very good and the most quality, which is normal bonds. But in general, this will not lead us there where we want to be in terms of development of different and alternative sources of financing. So I strongly believe that we really should find some modus operandi, like to work along together. This is my opinion, in order to really, if we want, actually finally jump out from this a bit boring plain vanilla financing.
And banks are not as conservative as insurance companies. This is proven.
Yeah, so we just want to provide, you know, the service and everything that could really help them to do more. Because, you know, when we enter for instance, like capital markets, emission of corporate bonds, you know, we have a lot of job to address and to explain why this is actually for you, even though the yield is even more competitive than what we are actually gaining as a banks. So, you know, is it about, you know, being just banking solely provider of the financing and funding of innovations, infrastructure, whatever, or else we can jointly do something really to change the picture.
Fully agree. Financing by the insurance industry would be supplementary. This can be only done together with the banks. This is out of discussion, and in other countries it's working pretty well. This is state of the art. And I think here in the region, there's still potential and opportunities for the future, fully sure.
Continuing on this, please, I mean, this for Vlado, this is for you, but please jump in, anybody who wants. Do banks themselves resist capital market development because it threatens your dominance in the financial sector? Or is this a complementary service in the financial environment and ecosystem and how we would work together?
I already started preaching with referring to what Christoph said, and I'm really preaching so much about these capital markets. And for sure, I think that serious banks shouldn't see it as a threat. this is something that we should see it as a complementary. I understand completely this original fear that actually someone is stealing something from us, but I think it's a completely different story. Because why? Because we are just widening the possibilities actually in the market. This bucket is becoming more larger because there are a lot of different opportunities that will be actually more likely easier served, easier financed from the different sources like on the capital markets. So how I see it, on a different, on more developed ecosystems, banks are for sure structural important part of the capital markets. Because actually we are over there, I already mentioned it, we are appearing like corporate agents, arrangers of on corporate bond issuance, custodians, hedging partners, you name it. So we're already there. And there is also something in it for us. There is different variations of fee-based revenue streams for us, because everything what I mentioned is, again, new fee income generator for the banks. And if the whole bucket will increase, meaning the scale of the whole overall money in investments will increase, we will all, get on and we will earn a lot. So this is a question. This is actually about it's not a question whether we should ask is it between bank lending versus capital markets. More correct, better approach would be bank lendings and or with capital markets. So I think that right now in Serbia we have this shallow capital markets. Actually, it just started. You all witness this corporate bond issues of company Elixir, and I think that in the next period of time we'll see a lot of different emissions. But for sure, this project of capital markets development has been already started by Ministry of Finance in cooperation with the with the World Bank, and we are a significant partner in this. And I think that if we see it as a complementary, not as a threat, we will really increase a lot, and it will increase actually a lot of different opportunities and given different chances toward customers and companies to say, okay, I can choose between banks lending, corporate bond issuance, IPOs, investment funds, whatever it is. So there is a variety of different sources of funding. And this is, again, referring to your first question, this is about structural growth and where actually finance and economy should go.
And you mentioned this brings the new revenue streams for the banks. And I know
Exactly.
I know from past experience that banks never do anything for free.
Sure. And they like it, so why not?
Stanislav, coming on this, if alternative investment funds, closed, open, whatever, were allowed to invest or take stakes into companies, which stage of the company's life cycle should they enter into?
Yeah, that's a difficult question because there's a big difference between early stage development and later stage developed companies. Basically, I think for our market, the most important thing is that we are still building trust. We are still I would say, young market, and there is a big part of our efforts invested in education, in educating investors and basically explaining them what they can expect from those kinds of investments. And bearing that in mind, I guess that more predictable projects, more predictable life cycles and cash flows can be seen in later in more developed companies. So I think early stage companies are quite risky, and of course, as we said earlier, there's a different kind of framework that should be adjusted in order to invest in that kind of startup. So I think for us it would be better to invest in later stage companies for our market. But as I said, early stage companies are bringing more risk, but of course more returns. And when you know the fact that, for example, 90% I think of the startups defaulted that is very risky. But yeah, alternative funds are made for riskier investments, let's say. But as I said, I don't think our market is still developed enough to perceive that difference.
Alexandra, how do you see innovation's impact of bank roles in the wider ecosystem?
Yeah, what I see is that innovation is likely to push the banks from their walled garden, from their closed ecosystem, to be more like a center or the core of many different ecosystems. And this is, again, due to this, as I said, innovation making finance componentized, and the fact that while banks will still deal with the heavy stuff like liquidity and trust and the risk, they will still have their licenses as some kind of mold. It's likely that customer journeys will increasingly be shared with some other platforms like telcos or maybe merchant platforms or e-commerce platforms and so on. So this will banks still be valuable part in orchestrating certain capabilities instead of just selling products. And these capabilities could be, again, like KYC and identity. Banks are excellent in this. Why not share this capability and put it as a component in a wider ecosystem, or payments we know as well, and but also judging risk. So in that sense, you can see that maybe some mental model of having a bank like some kind of fortress where we keep the money and treasure, and somebody goes in and transacts the business and comes out. I see it more like becoming more like a power grid. In a sense, it's invisible, but it's present everywhere, and if something happens to it, you will know. It will hurt. And this, because of these scenarios like some kind of accounting software or some kind of maybe retailer offering some services with bank behind it, maybe offering real-time access to credit for some kind of offer based on data and based on behaviors and data that banks and retailers share, is something that will definitely help banks become members of different ecosystems. And I see that in this kind of ecosystem play, the banks that are easy to work with will be the winners. In a sense, they will not have to grow through branch networks, what they can grow through partnerships.
So user experience at the end of the day is what's going to attract the customer. This is
yes, I'll see that banks will have to concede some control and part of user interface, maybe to some large platforms. Imagine Apple, Google. They can offer whatever they want on their platform, right? And they can offer the best user experience. And then why not still take piece of this cake as being somebody in the background?
Is this also valid for insurance companies, the same use case? What do you think?
To some extent, yeah, to some extent for sure, yeah, but just to some extent. Yeah.
We in the financial industry don't like to give up control.
Yeah, for sure, yeah.
It's a fact.
Yeah, it's a fact, yeah.
Christoph, I want to ask you one more question. Basically, this is, let's say, the diversification and proliferation of finance. And basically, this is if we would aim to reduce the concentration of in corporate lending from let's say from banks to maybe insurance companies or some other investment vehicles, would this only substitute, or it would complement the financial industry? Or, for example, my question would also be: would you be interested, let's say, investing in above 10-year maturities, or because the banks traditionally, let's say, invest up to 10 years? What is this, let's say, this mix? How would you see the position of the insurance sector there?
I think we only could, let's say, take or invest in certain areas. Yeah. So still, banks will be the main players, or let's say players to a high extent. Yeah. We just would take or could take certain share, and I see here, yeah, especially for life insurance, some maturities in the areas of long-term bonds in the area from 10 to 20 years, which also should have some kind of collateral, yeah, and stable cash flows, yeah. And as I said previously, yeah, it's always a question of quality of the paper. Yeah? So we like also to invest mainly in rated papers. Yeah, so maximum BB, I would say. Yeah? So this some area, yeah, where we invest our clients' money, yeah, where we feel comfortable. Yeah, this is the area which would be interesting for us, and which would be not just interesting, which also would be appropriate. Yeah, and I also think. Sure, regulators then can change, maybe give more flexibility to the insurance companies, but on the other side, regulation makes sense, yeah, to protect consumer interests makes sense, yeah. We can maybe adopt here and there, yeah, but overall regulations make sense, yeah.
Thank you. Okay, one more question to everybody, but I want to be short because we have the rapid fire afterwards, which I would like to be. I think it's interesting. So one question, but short answers, please, because I would like to leave some time for Q&A to see if there's some questions. If Serbia is to accelerate sustainable growth over the next decade, from which part of the economy will that growth realistically come, and how will it be financed? Please.
I've replaced Minister Mali from yesterday, actually. But for sure, we need to invest in stable sources of what actually will bring additional high value added, like services, like in IT industry. Why not? Infrastructure. Yesterday we've heard a lot about this leap into the future, and that is actually bringing a lot of investments in infrastructure, like railroads, highways, whatever it is. I think we also should invest in something that we are so far doing good, but it could be even better. From this 48 billion to increase it, maybe to double it, is export-related goods. Because whether we like it or whether some like it or not, we are part of the Europe, maybe not part of the EU, but our proximity towards EU allows us to be more and more aggressive on that side. And we shouldn't forget also projects related to energy sector, like renewables, storages, whatever it is. And I don't know, this would be something that where we should finance. How it should be, it could be financed, because this is again the topic from bank loans, from of course EU funds, IFIs, project finance related to especially energy and real estate, for instance. And finally, already mentioned capital markets. Why not?
I would see opportunities in export industry, as in the production field. I also see space in infrastructure, but I also see space in tourism. You have a very nice, beautiful sceneries, yeah. There still is possibilities to develop further, yeah. But main topic should be export industry, yeah. Export.
Yes, well, I would agree with Vladimir and Christoph. Yeah, basically that should come from technology, from services, from infrastructure, exports, of course, and very interesting thing about tourism. Yes, we never think about that, actually. But yes, the areas we mentioned are actually the areas that are funded most globally from alternative investment funds. So yeah, we would like to see more of that, yes.
When it comes to sectors, all of the above, all what you mentioned, I would maybe just single out one, and this is high-tech goods and services. So definitely more IT in the export, I think it will drive it. But when it comes to the size of the economic operators, I think that growth could come from SMEs. In a sense, I think they are currently do not have the access to financing that maybe they should have. And I think the growth should come from the having the SMEs upgrade their productivity by digitalizing sales and other stuff like big companies do, right? We have a lot of digitalization that happened in banks, in insurance companies and funds and so on, but not so much in SMEs. So if some kind of manufacturer is able to digitalize their operations more, this is SMEs, we will get the benefits. And the financing of it, beyond traditional means of financing, I think that data and performance-based financing and non-traditional things like supply chain and maybe somebody having stable invoices and stable payment flows could get offers based on just this date, performance and data.
Thank you, and I agree with all of you. And Alexander, thank you very much. We're looking to buy a few companies, so I'll call you for the digitalization of the companies. So you have a new job. Okay, now we have a section which is called Rapid Fire. What is Rapid Fire? I'm going to ask a few questions, and I want you guys each to answer in 1, 2, 3 words. So my first question is, biggest underestimated risk today?
Demographic risk for me, for sure the demographic risk.
Shortage of high-end quality talents in corporations.
Yes, talents and human capital. Yes.
I would say cybersecurity and AI risk apathy.
Next question. One innovation that will disappear, for example, in the next 5 years, in your opinion?
This was hardest. I still don't know, but something what we are doing is for sure we will foresee that will vanish is like a paper-based onboarding, banking or a branch without purpose, passport-only protection, whatever.
I think we will not work, socialize and consume in this virtual world called metaverse, that we will all around with these glasses. This I think will not survive. This will not fully disappear, but I think we will not see in the future many people running around with these glasses.
Yes, I can agree with that. I would also prefer that to disappear. So let's say it's
I would say plastic cards.
Okay, third question. One innovation that will dominate in the next 5 years?
Data-driven, AI-driven, personalized banking.
Yeah, AI will be normal, like we will use AI everywhere like you used to the electricity, so it's all about AI, yeah?
so AI. Yeah, definitely personalized AI.
I would say using AI to build more AI.
I have a question on this AI, and this is, Alexander, this is for you mostly. Everybody's talking about AI, and how many jobs it's going to cut?
40%.
40%.
You asked, I answered.
I just wanted to say my opinion. We lived, this is the fourth and a half industrial revolution. No industrial revolution up to now increased unemployment. And the demographics were much better then than they are today. So I think that, with AI, we're going to just be doing smarter, we're going to have more time to do smarter things. This is my opinion, be more productive. This is at least my opinion. Okay, next one. Growth or stability? What should regulators prioritize?
Stable growth. But for sure, it's a prerequisite, actually. Stability is a prerequisite for growth. So for sure, it goes along, hand in hand.
Yeah, well, I would say a hybrid model between growth and stability, but I think stability first.
Although it's hard to imagine going one without the other, I would say growth, because natural reflex of regulators is stability. So let's focus them on another thing.
No, this is a very delicate balance, and this is, let's say, this is the diversity we have in this panel. We have the technology guy that wants to have the growth, and the finance guys that want to have the stability. But at the end of the day, it is, stable growth, as Vlada said, and not to have, let's say, the stability to hinder the growth, and to shave off what percentage points of GDP could be shaved off the growth, because we want to have more stability. And stability, of course, is a must, but not to overdo it. This is the question. One more thing that I want to come to you, and this is, let's say, and a lot of you said this, is the demographics or the education. And how do you see this? This is my question basically to you, not the audience's. how do you see this? I mean, because for me, this is the most vital and most part that we are, let's say, underestimating today. One is demographics, two is the quality of the workforce, and what we're doing, let's say, to have this modern workforce, and let's say that's going to bring this added value. How do you see this complexity and importance, and what would you suggest, let's say, if you were in a position that you could change something, what would you do?
No.
So we just need to solve demography. This is okay. Thank you for easy questions. So I would say, so if we have this kind of growth, stability, the things that you mentioned, prosperity, I hope that part of demography will be also resolved with this. Also, we will get some inflow of people from other places outside of Europe, right? This will happen from Iran and from other places as well. And this can also help with the demographic issues that we have. When it comes to education, this is really hard to say. I have a lot of people asking me what kind of university or kind of faculty should I tell my daughter to right now to go into, and I have zero ideas on this. I'm sure that there will be a lot of different new kind of professions that we right now have no idea of, but regarding the traditional ones, I'm sure that in our industry, software development and software engineering will be completely changed in a couple of years. About bankers, I'm not sure. So it's hard to say.
Yeah, demographic situation for sure. It's topic of immigration. Yeah, countries, governments needs to develop clever immigration strategies. Yeah, to bring people which are fitting in the country, which have the know-how. Yeah, which also have the mentality, and which have the knowledge. Yeah, so there will be, I think, governments have to put strong emphasis on getting the appropriate inflow of people. When it comes to education, I have a daughter, she's 19 years old, and she had her final exam last year, and when I look, she's learning the same things which I was learning, now it's 35 years ago, and simply nothing has been changed. I ask myself why nothing has been changed, because I think these people make the education program are people who only did one thing in life, making education program, coming from the education industry, not from real economy. And so I think education system must be changed, and also in this change, real economy needs to be involved. What is needed? Which knowledge is needed? Must be a dialogue between education sector, field, however you call it, and also a stronger dialogue with real economy.
Thank you. Yes, I also think that well, the whole system, the educational system, should be changed. Should adapt those demographic change and basically the changes in interest of the next generations. As Alexander said, we basically, I think, right now have no idea what the future interests would probably be. But I think that some kind of traditional areas like banking it will be difficult to change it. So basically, I guess I think that will basically remain the same. But technology-wise, there would be some shifts, definitely.
Yeah, I don't know about demographic, but I'm actually will attach to what Christoph said. As a father, also a 17-year-old boy, who actually now is thinking where to study. So, and referring to what Christoph said, we really need to adopt ourselves towards the environment and what we're actually where we're heading actually, and we cannot be angry on them while using all, as you said, like AI or all smart things to do things more smart or more efficient. And in that sense, I think that we really should, create a bit of a different way of education to prepare them for what is coming.
No, I mean, from my opinion, education is very important, and not just this. I mean, there's a clear correlation of quality of education and GDP per capita. If we manage to improve education, we will clearly have very, very big, important economic benefits on the long term. This is from us. Now, the pitanja iz publike. Može na srpskom, može na engleskom, šta god hoće. Sve bili smo odlični. We were excellent. Nobody wants to ask a question. Imamo jedno pitanje.
Thanks so much. I would like to ask a question because you mentioned and you talked about capital markets before. In particular, you mentioned bonds, corporate bonds. Now, going forward into the future, if you are ought to obviously offer corporate bonds to the public, and how would the yields and how would the liquidity, in your opinion, be achieved in a plausible way so that it's an attractive product compared to, let's say, the loans that those companies would preferably sometimes choose because of the cheaper cost of funding, and at the same time the attraction of the public so that they are active in that market?
If I understood the question well, I think it's not about choosing the pricing and actually the yield from the other side. It is about exactly how, on which actually basis we are standing right now. On plain vanilla financing, where actually we will, for instance, we discussed about hotels that can be financed from the bank lending, 10 years tenor with the balloon, or else from the capital markets through corporate bonds emission on 25 years. So this is just to align the necessity with purpose. That actually you will choose corporate bonds with its own price. Maybe it will be for sure a bit more expensive for you as an issuer, but for sure you will be much more efficient in planning, and for sure you will know that you will adopt your cash flow finally accordingly to what actually your business is actually asking for. If I understood well. Yeah.
Can I add? I think there was a second part of the question. It's the liquidity of the market. My opinion, again, coming from finance in the past, it is trust. Trust in the financials, trust in and of course you have to have in order to create the depth of the market and to have the liquidity and the possibility of other players besides the banks of tapping into this liquidity. But if you have the trust and you develop the liquidity, because this trust can come from this liquidity, then you will have the depth of the market in order to develop a secondary market of bonds and capital markets. This is my opinion.
This is very well said. This is exactly where we go, along and hand in hand operating. So it's good.
Još pitanja? Nadam se da smo odgovorili.
Hi, my name is Katarina Đulić. I'm professor at FEFA. We heard a couple of discussions with some owners of businesses. And actually, do you think that financial literacy is also important for investment options? Because, for example, some SMEs were reluctant to issue bonds or do something because they don't fully understand how these instruments work. Do you think it's an important issue?
Yes, thanks for this question. Thank you very much. Fully agree. Financial literacy is a topic. Yeah? It's not a topic here in the region. It's also a topic Austria, Germany. We did a study about financial literacy, and we were more than surprised about the results. Knowledge of young people is weak. Yeah? We did it financial literacy and also risk literacy. And those of you as insurance industry and I think financial industry need to work on this topic seriously. Also, let's say European regulator has this on the focus. Yeah? Education, financial literacy is definitely a topic which will be relevant and important for the future. And it's also something which my colleagues here in Belgrade will follow up, yeah? For sure.
Yeah, I will just attach to what Christian said. Also, thank you for the questions. For the question, actually, this is about educating also the market and teaching all the SMEs that are actually really suffering with the knowledge, financial knowledge of what actually they need at first. and how to get to it, because this is really cumbersome processes, so they will have to be, to teach more and more about how to use these products. So for sure, this is of extremely important, essential importance, for sure.
Imamo vremena za još jedno ekspresno pitanje. Ali baš brzo. Ako ima još jedno pitanje. Nema više pitanja. Ok, moramo završavamo, pošto je posle nas i ovaj najskuplji panel, ovaj bankarski. Hvala vam puno. Thank you very much.